What's up, team? Yeah, so all right, so we're also watching QCOM, PayPal, and more. Let me know if you're bullish or bearish on these earnings. What's up, Joe? All right, let me know if you're bullish or bearish on Facebook's earnings report. Is there a Mercedes Texas? I have no idea, bro. I really have no idea if there is one. All right. All right, big tech earnings today. We got QCOM, PayPal, and then QCOM. What's up, Pawn? Thinking bearish this time. Yeah, last one was tough. If we look at Facebook, it's at 173, very cheap. I think you got to look at like a 4-hour chart to see the real picture of Facebook. Now, Facebook, previous to all of this, was at 320, 330, so it's lost really about half of its value. It lost about half of its value since the end of last year. Facebook has lost half of its value. It mostly started in late January to early February when the earnings came out and absolutely crashed the stock. And so I think most people are going to be bearish on Facebook for sure. I think this is where, a lot of people are going to be skeptical of Facebook. And if we look at the earnings report here for last time, it was pretty rough. We're going to see what happens today. The conference call is at 5 p.m. First quarter earnings is going to be after the bell, so that's in about 20 minutes. We're going to have first quarter earnings drop. And again, let me know if you're bullish or bearish on this. It's been a pretty tough time for Facebook. Like I said, they lost about half of their value over the last, few months, and it just hasn't been a good time for them at all. It's been pretty rough. Thinking bears this time, yeah, for sure. Dude, where is Mercedes, Texas? Is that even a thing? I gotta look it up now. I'm not from Mercedes, Texas. Oh, it is a city of Texas. I had no idea. I'm not from Mercedes, Texas, so I am from Louisiana originally. I'm from Baton Rouge, Louisiana. Looks like a small little town. About 15,000 people. All right, so Facebook is at 173. Honestly, I kind of want to buy the dip in Facebook. Facebook lost most of its money in the fourth quarter from metaverse projects, and I don't think Mark Z is going to necessarily like push that heavily again here. So I think they're going to have a good earnings season. I think they need to. I think necessity is going to boost them up. And so I think they need to have good earnings because, frankly, it hasn't been good. And so we're going to see. No, I didn't. What did Elon say about DWAC? People are saying Musk is killing the deal by posting what he posted an hour ago. He posted that thing about their current, what's her name? I can't remember. I looked it up earlier. But yeah, he made a post about the cycle of bias. And yeah, we'll see. With the market on edge right now, I think Facebook would have to really have a good earnings to prop it up some. Yeah, for sure. Bought Facebook puts and made a killing last night. Earnings been staying out now. IB too high. All right, guys. Are you buying Facebook pre-earnings? Facebook calls or puts pre-earnings? That's the real question here. Is calls or puts pre-earnings? I kind of want to see what the cheapest call option is going to be. Let me see. All right, so we're already up over $100 today. Do I want to mess around and buy a call option right now on Facebook? Do I want to mess around and buy a call option on Facebook? Right, I can get a 6th of May call option. Ooh, they're expensive. Ooh, they're really expensive, bro. A call option right now would be just for May 6th. So just like a 10-day option would be about $1,600 just for one contract. I'm okay. I'll pass on that. That's no good. April 29th call option, so a 2-day option is still like $1,400, $1,500. Like the cheapest one is like $1,000, and it's $1,065, and it expires in 2 days. I just don't know. I'm not down with that. Too expensive. The longer you go out, the worse it is. Yeah, I'm just not going to buy call options. I'm not going to risk. I tend to think we're going to go up, but I don't know, and I'm not going to risk $1,000 to bet that. I might win thousands, and if I'm correct, but yeah, I just don't think that's the right move. Are you even subscribed? Hey, Emmanuel, I saw you reach out about editing, brother. If you can edit, dude, you could be my editor, bro. Just hit me up, dude. I got 180 puts, expire Friday, $1,500 gamble. So that's a put option, right, Lil Beef? Hey, good luck, man. I think with the rise in inflation, LVS is about to report some bad numbers. Hey, we'll see. Certainly possible. It's the thrill of the market. Hey, do your thing, bro. You might kill it, man. You might make some money, dude. I know. I wanted to buy. Man, what was the one? I wanted to buy puts on. What was the last earnings call I did? Let me see. I wanted to buy puts on Tesla. Or no, I wanted to buy Netflix put options before Netflix earnings. And it was nasty, bro. It was rough, bro. I would have banked on it. I was super disappointed I didn't buy put options on Netflix because I wanted to too. And there were some cheap ones I could have got for like 300 or 400 pre-earnings on Netflix. And I just didn't, you know. One of the biggest regrets of the last few weeks for me, obviously. But, you know, it is what it is. Hey, John, what's up, Isaac? I got 2 puts right now. Hey, good luck, man. You got this, bro. I don't know. I tend to be, here's the thing though, right? Like I tend to be a dip buyer. I tend to be an extension believer where I look at extension and I use that to influence my decision heavily on direction, especially short term, especially with earnings like this. If a stock has really bad earnings, they're going to be fighting to be profitable the next quarter a little bit harder, and thus they're going to have better earnings generally as the next quarter rolls around. And I tend to believe the same thing with Facebook here. But again, nobody really knows what these numbers are going to be, and we got to just wait. We got about 13 minutes until the numbers are out. And so let me know, vote on the poll if you're bullish or bearish on Facebook. Yeah, I stream in the morning, Isaac. We stream every day. We start really late, so you might not see the alert when we first start because we start at 5:30 my time, which is 6:30 market time. So we start the stream at 6:30 in the morning. So hey, hit the notification bell, Isaac, and you'll see us. We stream every day. Just join our Discord, bro. We got like 7,000 people in our Discord. I tend to think Facebook is going to go up. But here's the thing, bro. If Facebook has a bad earnings reaction, it's going to be in trouble, dude. Facebook is going to be in a lot of trouble if it has bad earnings. I kind of want to buy the dip, though. I kind of want to buy it right now. Should I buy it? Pre-bell. Small. Should I buy Facebook pre-bell? We're up about $100 today. Here's our profit so far in the day. Small, but like green nonetheless. You know, here's our day of day trading. We're up about $110. Should I buy Facebook pre-earnings? That's another question. Let me ask the chat. Chat, let me know. Should I buy Facebook pre-earnings? Should I buy Facebook pre-earnings? Let me know. Nope, sit out. Loaded question there, Antonio. All depends on how much. Been waiting all week for these Facebook puts to print some money. So how much money can you make if the stock drops? If you buy put options, you can make a lot, but it just depends on your option contract. It's going to depend on your option contract and like what that says. But you can make a lot if the stock drops. You can make a heavy amount of money if the stock drops. So yeah, we'll see. Y'all do me a favor, hit the like button as well. Hit the like button as well. Earnings come out in about 11 minutes. 11 minutes. We also have QCOM that we're watching. We've got PayPal that we're watching as well. PayPal's gotten kind of beat up over the last few years too. You know, PayPal is no longer as useful as it once was because of cryptocurrency. is what this is. So PayPal is no longer as useful as it once was because of crypto. QCOM has just been falling with tech over the last few months or so. John, why do you ask the public for financial advice? I mean, I think that you're misinterpreting what I'm doing, IG. I am asking the public their sentiment, which I think, considering the fact that I run a stock market related channel, is understandable. I'm asking the public for their sentiment. I think it's a really interesting thing. And it's not just for me. I mean, to be honest, I don't really take into account what anybody else says or does. I usually go my own way, and I'm profitable as a trader, green on the year, without copying somebody else's sentiment. But I also think, especially with these big earnings releases, seeing what the public has in terms of sentiment is understandable, and it's something that we should do. It's something I should do if I run a channel like this, is see how my viewers are, siding in terms of bias and siding in terms of sentiment for these big names and these big earnings releases. Again, I just think that's an understandable thing. It should be obvious and self-evident why. But hey, all good. Netflix gone to 2018 levels. I think Facebook will go there as well. Market sentiment, yeah, for sure. Or it could drop and you get IV crushed and still lose money. Yep. The thrill of the release. Glad to be here for it. Haven't seen your channel before. I dig it. Hey, thank you, Lil Beef. I appreciate you, bro. How long can it go in your can it go in your opinion? How low can it go? I don't know really for Facebook. I used to think Facebook wouldn't drop under 200, but I was definitely wrong about that. And so, I don't know where it's going to go, to be honest. Yeah, it's interesting to see what traders are thinking. Exactly. I mean, that's the real reason. It's just you got to judge people's sentiment, see what they see why. Should be an understandable thing, in all honesty. Like, I don't sell anything. I don't claim to be an expert. I don't charge for anything. And so judging what my viewers are thinking is not a bad thing, unless you're trying to make it one. I'm a bear on Facebook. I tend to be as well, Eric. I tend to be as well. And again, I have no idea what Facebook is going to do in earnings reports. We'll see. Hey, what's up, Mark? I'm predicting around 165. My target is 140. Oof, good luck, man. Short Zuckerberg. Hey, we'll see, man. Like I said, this is a polarized one for sure. This is a polarizing earnings release for sure. A lot of people are going to be rooting for Facebook's demise, and a lot of people are going to be wanting to buy the dip too. And so we'll see. Again, I tend to be a bull at these levels for Facebook. I think Facebook is cheap here. I think it all depends on percentage drop, but I think if we look at this, Facebook has dropped roughly 50%. Roughly 50% since October. So Facebook is down about 50% since October. That's a big drop. It's a big drop. I tend to think we're going to bounce back, but maybe I'm wrong. I don't know. Yeah. Did I have in the title? Earnings call at 5 p.m. Eastern. Yeah, that's what I have. What do you see 4 p.m.? It's at 4 p.m. for me. So 4 p.m. Central, 5 p.m. Eastern is when it's at. Don't get me wrong. I believe they're a $200+ stock, but not in the near future. Yeah, I kind of feel the same. I made like $90 off of Facebook puts today secured, mostly playing it for a Netflix-like drop. We'll see. It could happen. And if it does happen, it's going to be big stuff in the stock market. For sure. It definitely could happen. If it does, it's going to be big for the stock market. We'll see. Could go either way. Again, we got QCOM, PayPal, Facebook, earnings. All right, so yeah, Facebook down to 175 here. I don't know. It's starting to rebound pre-earnings. It's over VWAP. It's at 175.50. So big level there, I think. 175 big. You want to see it hold over that too. We'll see if it does. Can we know the exact release time for Facebook earnings? Well, they're going to be post-bell. So they're going to be after the bell. Yeah, that's probably true pawn. I could buy a SPY put option and just hope that if Facebook is, I don't know if I want a Facebook put though. I tend to be the person that think Facebook is going to go up. I think my general logic here is that when a stock has a bad earnings release like Facebook did last time, I tend to think they're going to fight a little bit harder that next quarter to put in better than expected numbers and higher than expected numbers. And so with that, I tend to think Facebook might go up after this earnings release. It's down 50% in the last few months. And so with that, I think people are going to want it to go higher, and that can bolster it up a lot. And so I tend to think that we're going to see bullish action from this. So it more so be a call option. We already had a really brutal earnings report a few months ago for Facebook. And so I tend to think they're going to go up, but I might be wrong. I'm just guessing here. Yeah, for sure, Nick. So you straddled it. I do think either way it moves will be a 10 to 20% move. Yeah, that's 10 to what, like that's where a straddle could come into play. Either big sell off or big run up. Yeah, definitely could see that happening, Aaron. It just depends, man. It just depends. Like I said, I tend to think that since the earnings release was so disastrous last time and we dropped so much from it, that we're going to get a bounce back this time. But again, that's just a guess, really. You never know. As for when the exact earnings report is going to be released, it's going to be released in about 5 to 10 minutes, probably. Usually it's anywhere. It's within 15 minutes after the closing bell. And so that's usually what we're going to get is, 15 to 20 minutes after the closing bell, the earnings report's going to come out. All right, guys, 3 minutes into the closing bell. 3 minutes into the closing bell. Let me know what y'all are buying. People think there's a thing called a call put. So you're buying a call on a put option? Wow. Sounds mystical, bro. If it moves like a 30% move, I will make 10K from $300. Hey, good luck, brother. Good luck, man. 20% down on Facebook puts it at a support area of 139-ish. All right. Let's take a look. 139-ish. So that would be right around here. So we'll make this big and see if that's where it flies to. All right, there it is right there. QCOM up there too. Here's Facebook. We're at 175.30s right now. 175.30s. Is this where we can watch the Facebook earnings call shortly? So it's going to be in about an hour, but yes, Straight Jacket Studios, you can watch it here. We're going to be streaming that as well. So we'll do that live. We'll play it live on stream. You'll be able to listen to it and watch it if there is video of it. You'll be able to watch both and listen to it here. Oh, stock earnings are dropping at 4 p.m. Yeah, so the actual earnings are going to be released at 4 p.m. Hey, good luck, guys. The latest what, Michael? Yeah, no worries, Straight Jacket. All good, bro. I have Boeing puts. Thomas? Hey, good luck, man. Caller puts right now. Caller puts. Let me know. Like a straddle strategy. Wait, you're a YouTube streamer. You must have an obligatory AMC chart. All right, guys, 1 minute. We got 100 people here, so that's not bad. We'll see what we get, guys. 1 minute. Yeah, so the earnings come out, Straight Jacket, at 4. The earnings come out after 4 p.m. There's no really exact time. Usually they're dropped sometime after 4 p.m. And so now that we got less than a minute until that happens, I would be watching for volatility in Facebook or meta, whatever you want to call it. They're going to drop, generally speaking, they're going to drop right after the market close at 4 p.m., which is right now. And so right now they're going to drop usually, and we'll see what happens. Same thing with QCOM, same thing with PayPal. You can also watch for stock market volatility. There's the 4 p.m. bell. So we got the closing bell done. It's at 175 right now. And again, we're going to see what happens here. We're going to see what happens. We're at 174, 175, and let's look for big movement here for Facebook. Watch Tesla. We're watching a lot of different things. But yeah, generally speaking, they're going to drop 5 minutes or so after the opening bell, sometimes earlier. And we're going to be watching heavily for that. We're going to report it as soon as we get it. So, yeah. Sign up for the call here. Oh, wait, is the earnings report going to be at 4 p.m.? So they say it's going to be at 2 p.m. PDT. I hope they said it was at 5 p.m. was when the earnings call actually is going to be. They're not letting anybody into it either yet, so. All right, so here's Facebook. It's down 173s. We haven't got anything yet in terms of like stock market reaction. And so nothing yet here. We got Thinkorswim too up as well. Vote on the poll right now though, guys. Let me know if you're bullish or bearish on Facebook here. Let me know if you're bullish or bearish. Barron said 5 p.m. Eastern Standard Time. It's weird, though. The Facebook Meta investor relations page. If you ever want to find these earnings releases, you go to their Facebook. You go to the investor, the IR page, the investor relations page. That's where you usually see everything. All right, guys. So Facebook up to 175. I wanted to buy it. Let's see if I was right about my original bias here in Facebook. I wanted to buy it. Let's see if it happens. Yeah, good luck, team. I got everything ready here. All right, guys, waiting for these numbers to come out. You'll usually see a big boost of action come in as soon as the earnings are released. So like watch for just a big bump in Facebook. Everybody here for the first time, listen, we trade live on stream every weekday morning for free. And so we day trade live on stream every weekday morning. We trade $120,000 in buying power at the opening bell live every single day. We start at 6:30 in the morning and we stream until a few hours after the opening bell. And so if you want to see some action with us, if you want to talk about the biggest stock market news early, say you're up early, hit the stream up, hit the subscribe button right now, hit the notification bell, and you'll get alerts anytime we go live or drop a new video. And with that said, let me know if you're bullish or bearish on Facebook or Meta. Pre-earnings, they should be dropping anytime now. So we'll see what happens, guys. Good luck. We'll see what happens. The hedgies are waiting. Yeah, for sure. We'll see. Honestly, I'm ready, bro. I'm ready. We'll see if we get some volatility here. Facebook got up to 175. I think 175 will be a big support level too. I think 175 is a big support level there too. See some options activity coming in for it, but nothing really substantial yet. Earnings surprise, nice. Hedgies are waiting. You can still buy shares. Yeah, I could buy shares anytime. I could buy them right in the middle of earnings. It doesn't matter. But I don't think I'm going to. If I do, I might buy like one share, you know. Waiting for the numbers to come out, and vote on the poll right now. Let me know if you're bullish or bearish. We got about 200 people here, so yeah, vote on the poll right now. Hit the like button as well if you haven't already, guys. Yeah, we also have a free Discord too. If you want to find the Discord, you just go. All right, waiting for numbers to come out. I'm gonna look at the earnings call too. Apparently, it's not going on yet. Looks like they were wrong. If this is telling of their organization over there at Meta, it doesn't look good. Okay, they said their earnings call. There's the earnings dropping right now. Wow. Oh man, take me back, guys. Take me back. All right, here's the numbers right here. So we do have the numbers. These are the numbers that just dropped. Take me back freaking 30 seconds ago, man. I hate always being right, bro. I'm right about everything. I hate it. I hate it, man. I should have bought my call option, guys. I should have bought my call option. Darn you, Facebook, for having expensive call options. You love to be right. Oh, man. Facebook put in... you love to be right. Yeah, it's going to be at 5 p.m. Eastern, so it's going to be about 55 minutes. You love to be right. Here's their numbers. We're going to get some actual numbers come out soon. All right, Meta put in first quarter EPS of $2.72 per share, beat the 226 per share estimate, or 256 per share estimate. You don't love to see it. You don't love to see it. It hurts. Facebook monthly active users are up to 2.94 billion, up 3% year over year. Here's the numbers right here. It hurts to see. I love being right about everything, man, but man, I gotta go with my own intuition sometimes, because I was absolutely correct here. Facebook saw second quarter sales of 28 to 30 billion, up versus 30.6 billion estimate. So a little bit lower than expected second quarter sales. Oh no, I just deleted it. I gotta go back and do it again. Man. You love it when you're right, but man, I gotta go with my own intuition sometimes. Monthly and daily active users are up. Here's the numbers right here, guys. Big numbers too. There's the numbers right there. We're creating a banner as well. That drops everything. Yeah, their daily active users are up to here's their full numbers at the bottom. Oh man, take me back, guys. Take me back like 5 minutes. How you guys doing, chat? This is why I pay the $5 a month, bro. I'm telling you, man. Listen. I don't know how many of these I've been right on, but I've been right on a lot, man. I'm gonna give myself some credit. Hey, good job, Nick. Yeah, I think you got to look at it in terms of like extension and dynamics of previous market activity. I think when you look at it, like I said, you got to think about it in terms of like extension. You know, Facebook is down about 50% in the last 6 months. Say what you want about Mark Z, but he does not want his company to fail. And so with those bad earnings reports that we've gotten over the last 6 months, he's going to try especially hard to boost the numbers for this quarter. And so I think it's a logical bet to bet on the upside, considering Facebook is down 50% since October. And it was it would have been a fun bet for me to get involved with, and I was absolutely correct on it. Absolutely correct. People ask me what I thought. If you're just now joining us, yeah, I mean, nobody ever listens, but it's okay. I don't want people to listen. I don't want people to copy me, but I hope people can understand the thought process of why I was bullish pre-earnings release here. When to get out of Facebook? Well, ultimately, Mimi, depends on when you got in. When would you get out of Facebook? It ultimately depends on when I got in. Facebook had good earnings. Facebook put in first quarter EPS of 272, beat the 256 estimate. Sales of 27.91 billion, missed the 28.21 billion estimate. Second quarter sales of 30 billion versus 30.6 billion, so a little bit lower than expected second quarter sales numbers. Meta put first quarter monthly active users up to 2.94 billion, up 3% year over year, and then their daily active users is up to 1.96 billion, which is up 4% year over year. And I think these are impressive numbers, because I think when you really look at it, the fact that their monthly active users are up to 294 billion and their daily active users is pretty close to that, on almost 2 billion. I think it's very telling of that, the amount that when people use Facebook, they usually use it daily. And so with that, pretty impressive numbers. Here goes the Facebook pop. It's up to 195, 195s. So also we're going to look at QCOM to see when QCOM numbers come out. And we'll report on these here too. It looks like QCOM had good numbers here as well. And we can also look at PayPal. I tend to think the same thing about PayPal too. QCOM put in second quarter adjusted EPS of $3.21, beat the 291 estimate. Sales of 11.16 billion, beat the 10.6 billion estimate. Third quarter adjusted EPS of 275 to 295 versus the 259 expected. So Qualcomm put in much higher than expected numbers. They expected sales of 9.98 billion. They put in sales of 10.5 to 11.3 billion. They expected 2.59 earnings per share in the third quarter of profit, and they got in 2.75 to 2.95 in profit of our EPS. So they put in much better than expected numbers for QCOM. Facebook is breaking highs here, guys. Facebook is breaking highs. We also had PYPL, PayPal. And I tend to think these are going to be good for the market too. And I think this is good for the market, guys. We've had so much doom and gloom over the last few weeks and months that I genuinely think this is good. I use Thinkorswim. Skywalker, Thinkorswim. We're also going to be doing the earnings call if you guys want to listen. All right, we're at 195s here. 195s for Facebook. PayPal at 84s. PayPal hasn't dropped anything yet, so PayPal numbers haven't come out yet. If PayPal numbers are bad, it's looking pretty doom and gloom, pretty grim for Facebook. Or not for Facebook, for PayPal. If PayPal numbers are bad, it's going to be looking really rough. All right, don't do it, Eric. Don't do it, bro. All right, y'all buying Facebook now? This Q is up nicely here. If we look at the Q's definitely reacting positively to this. Look at the Q up. And we made some money on the Q today a little bit. Here's the SPY. Q's a little bit more tech heavy. Here's the SPY. SPY up big too. Made some money on that one as well. PayPal will not be so great. Yeah, let me know what y'all think about PayPal too. Up to 84.70s. Yeah, PayPal's up there. It's at 84.70. Look at this fake out, though. This is why it's really difficult to make money in pre or post. Look at this fake out, bro. This one candle went from 84.60s all the way down to 82.60. So literally $2 per share. And then it immediately wicked back up. So it filled somebody at 82.60. They probably got the best fill ever. Wicked them out and then went right back up. 198.50 for Facebook. So Facebook is approaching 200 here. 200 is right here. PayPal is up there to 85s. Yeah, but their numbers are up, Thomas VG. And so, again, Facebook is still widely used. Widely used. They could sell off tomorrow. We'll see. I wonder if how Twitter is being affected by this. So Twitter's actually up a little bit in sympathy. I think that would have been the easier call option to buy. No, Michael, I'm not. All right, guys. Tesla. All right, there goes PayPal. Must have had bad numbers. Look at PayPal drop. It's down to $80 a share, all the way back up to 83.50s. Look at that down wick, guys. Wow. So PayPal must have just dropped their numbers. Somebody got them earlier than me because I don't see them here. Or maybe they had good numbers here. Wow, PayPal volatile here, up to 87s. So PayPal ramping up. Looks like good earnings, I guess. We're still waiting for them. I don't see anything yet. Nothing yet. Anybody see PayPal earnings? Maybe it's the guys over there at Bloomberg Terminal just getting their stuff early. All right, so here's the PayPal numbers. Finally drops. All right, so there's PayPal numbers come out. Yeah, they don't look good. Bear with me, guys. We're gonna report them. PayPal put in net revenue of $6.5 billion, up 8% year over year. Put in operating income of $0.7 billion, down 32% year over year. Put in earnings per share of 43-cent profit, down 53% year over year for PayPal. They put in a first quarter adjusted EPS of 88 cents per share, which is in line with estimates. Sales Well, shout out to Comcast for sucking so bad here. There we go. We're back. Yeah, we're back. Sorry. Bro, Comcast sucks, dude. Comcast, the worst internet service provider in the world, dude. Just terrible. Just absolutely terrible, bro. Scammy company, horrible. If they had a stock, I'd short them just for the love of it. We're back. Yeah, we're back. We're back. Yeah, sorry guys. Yeah, I should have bought this, man. I should have bought this. PayPal at 81s. PayPal at 81s. Verizon's supposed to be the best. Well, fiber optic is the best if you can get it. And we have people installing fiber optic in my neighborhood right now. Speaking of that, I'm going to sign into them and see when they're going to be here. They've already installed it. I already saw them. I've already like paid for my reservation. Ford. Yeah, what about Ford? How did Ford go with earnings here? Ford looks good. Facebook's still kind of edging up closer to those highs up there at 200. Yeah. Yeah, all good. Yeah, you can read all the numbers at the bottom here. We're looking at Ford. We're looking at Facebook. Man, I should have bought this up, though. I was absolutely correct about it. Absolutely correct. All right, Facebook testing highs. There's Ford pop a little bit. I'm wondering when they're going to... All right, look at Ford test highs here, guys. So Ford moving up, testing highs. I guess my mobile hotspot really isn't that bad. I mean, it's not good, but it's not bad. Hertz has earnings. Many people have fun. Yeah, I use Benzinga scanners most of the time. T-Sir, I get earnings stuff from Benzinga. And so if you want to check out Benzinga, here's the link. You can try them out completely free for 2 weeks without even needing a credit card number. So if you want to try out Benzinga, again, I'll post this link. You can try them out completely free for 2 weeks without even needing a credit card number on file. So check out Benzinga. Let me find the Benzinga link. I'm finding it now. I got so many links, it's hard to find everything. There it is. Check out Benzinga. You can find it in the description as well. Oh, what? It ain't free? No, Benzinga's not free. You know, And so most premium scanners and news releases aren't free. I mean, you can build a free one on Thinkorswim pretty easily if you want free. So you could try that, but you can try them out for free for 2 weeks if you want. Yeah, for sure, T-Sir. I know, Isaac. Tell me about it, bro. I know, dude. I'm trying over here, bro. Honestly, Comcast is the worst, dude. You know, they're the worst. But I appreciate the $5, my man. Thank you, brother. Appreciate you. All right, earnings call is about 25 minutes. Get ready, guys. Bro, I'm so tired, dude. We went on a 5-day trip. All right, so we got Facebook up to 198. Tom Brady has your back. I know, bro. Tell me about it, dude. I know. Optional cooling system coverage for your home serve for about $849 a month for a single AC unit. Help protect. Oh no, I don't want insurance. Dude, when did my gas get paid? I don't know. Whatever, dude. What about my water bill? All right, Facebook tapped 200. Literally just tapped it. All right, guys. All right, so my mobile hotspot is working. Should I keep my mobile hotspot going? I probably don't need to, actually. Hey, good luck, guys. How do I pay this? All right, Facebook up to 198. Facebook will fall. Yeah, we'll see. What about PayPal earnings, please? Yeah, we got PayPal numbers we could show you. I got you. Just for you, bro. Just for you. I'm going to drop these numbers. Just for you, bro. PayPal put in first quarter adjusted EPS. These aren't the numbers that they showed me. All right, guys, stick around. Hey, stick around. It might lag for a second. I'm going to restart my internet. So just stick around here, guys. Stick around. Is my internet really this crappy here? Damn, dude. It could also just be StreamYard acting funny. But there we go. All right, we're back. We got our internet working. All right, so we're back. So the actual earnings call is going to be in about 30 minutes. Alan, about 30 minutes. Ugh. Wait, when did my water bill go through? Okay, dude. You think you want to own a pool until you got to pay the freaking water bill. It's like $300 a month. It's either from that or my wife plays with the hose for a little bit too much. Okay, so I did pay my water bill. All right, dope. Okay, we got Pawn in here too, and Bobby. Sorry, guys. I asked both of you guys. But I appreciate it, Pawn. Thank you, brother. Pawn, no need to anymore, dude. It's up to you. I'd love to have you guys input on Facebook and PayPal if you guys want to join.
What's up?
So Pawn jumped in too. So sorry, I reached out to anybody. I was trying to reset my internet, so Pawn's here too. So Pawn, oh, there he is. What's up, dude?
What's good?
The whole gang's here.
Yeah, hey,
Bro, where's your virtual background? Slacking, Pawn.
Right, Pawn, bro, Pawn. You can just throw it up. Just try it. Just throw it up. Anybody can throw up their virtual background. And so,
no problem.
No need to anymore, dude. It's up to you. Yeah, tell me about it, David. I'd have you guys input on Facebook and PayPal if you guys want to join.
Hey, Pawn, I think it's coming through your speakers.
Yeah, I can hear it.
Here, let me
all good.
mute.
Yeah, and all good, Pawn. I appreciate you hopping on regardless, man. You know, yeah, you got to have the virtual background too, though. We got to be the virtual. We got to be the stock chart boys. You know, that's our gang here. You know what I mean? Q is
We've officially entered the stock matrix.
That's right. You know what I used to tell people is that I lived in Thinkorswim. You know, somebody was like, "Is that a green screen you're using?" I was like, "Nah, I just live in Thinkorswim. Like this is my home."
You can see the digital projection behind him trying to keep up.
I'm in the movie Tron. Yeah.
It's not Tron anymore. It's John.
Yeah, it's John. I'm in the movie Tron. You know, I just imported myself here. You know, but I appreciate it, guys. PayPal, bro. Honestly, I've been saying this for like years now. Crypto's gonna destroy PayPal. Crypto is gonna kill PayPal's business model. It's gonna make PayPal obsolete. Another thing that's severely hurting PayPal, I think, is cash apps like Zelle, Venmo. These cash apps are way more convenient than PayPal. And so I think these are things that are just not good for PayPal in general. But I think crypto is the real one. The problem with crypto, though, is that the fees are too high. So the fees are too high on crypto a lot of the time. And so PayPal is cheap, pretty cheap to send money, relatively speaking.
Speaking of, you guys heard of BitGet?
Yeah. BitGet has a competition going right now. Let me see.
Venmo is PayPal? Oh, yeah. Yeah, I think so. Yeah.
Oh, Venmo is PayPal. Oh,
yeah,
well.
They bought them. Yeah, I believe so.
But see, Venmo has lost relevancy since then, too, in all honesty. So, like, Venmo,
they have the Cash App and all that other stuff, but I don't know. They're definitely the most credible in my eyes, at least.
Venmo?
Yeah, Venmo's always been super easy to use for me. Same with PayPal. I'm not gonna lie. And
dude, I use PayPal all the time.
Bias. I am employed by PayPal. My company got contracted to work for PayPal. So.
Oh well, shit. You know.
We're bougie like that.
Oh, sheesh, man. We got the enemy in here, dude. I don't know. No, I'm just messing. I'm just messing.
No,
but no. I to their credit, I use PayPal all the time, and I've used them for years. I use them less now because their fees are just a little bit too high for me. But like, I still use PayPal. PayPal, they have a directed debit option, and so like when you work in this kind of niche like me on YouTube, and you work with a lot of different affiliates and sponsors and stuff like that, a lot of them pay through PayPal, and you can either wait, like a week and get it. Yeah, you can wait a week and get an ACH transfer for a little bit less fees, or you can get it same day directed debit on PayPal. And usually I'm just kind of like, I'll pay the $5 and get it now. I want it now, like Willy Wonka. Facebook just ripped over 200s, guys. Facebook just ripped. Got the 201s. Let's see if it holds. $200 is a big support level. Looking for financing now, PayPal for crypto strategy. Yeah, eBay split from PayPal, but that was a while ago, wasn't it? eBay split from PayPal a while back. No, we're not going to stream the PayPal earnings call, Mo. Sorry, brother. We're going to be streaming the Facebook earnings call, which is in about 25 minutes.
Wait, actually, Elon's actually buying PayPal back?
Is it really?
I have never heard of that, but I mean...
All right, I got to look this up. Are you trolling me, bro?
Oh, wrong hand. There it is. Oh, I'll get this one time. Oh, almost got it.
Oh, weatherman. We're weatherman. You see the chart over here? You know,
If you look at the
weatherman.
chart over here, this is where my stocks are going. If you look down here, down here, this is where your stocks are going if you're not trading with beginner trading.
You see this area right here? This is the support level.
You should actually be doing that in the mornings.
I do. I weatherman it all the time. Yeah. Not as much as I used to, but I used to weatherman it a lot. All right, so I'm looking up whether Elon's actually buying PayPal. When eBay purchased PayPal in 2002 for 1.5 billion, Musk made about 180 million from the sale. Yeah, I don't see anything about Elon buying PayPal. I mean, it's certainly possible, but I think Elon's going to be. He's not going to be hurting from buying Twitter, but he's definitely going to be.
When you casually spend a couple extra million to make a joke, he could have offered 54, but he didn't.
Yeah, for sure. Yeah, exactly.
Casual trolling.
Yeah, he bought the price for literal 420. You know. Statistics. Oh, you're just trolling, David. Oh, man, wasting my Google. Let's go.
Wasting John's limited internet, guys. Chill with that.
Wasting my internet over here, bro. You know, wasting my megabits per second here, dude.
Oh my god, I actually had someone. I had a complex try. You think your internet's bad, bro? Oh my god, try being a pro gamer on with a company that like they don't let any other company or department that won't let anyone else in. They have their own company that's like this outdated, horrible quality thing, and then they charge you on top of it for like. You can't get any other internet if you want to live there. You have to get theirs. And then they charge you have to pay the internet company. Yeah. And then you have to pay the complex for their router usage and all this stuff. You're not allowed to set up your own router and any of this stuff. I didn't know
Starlink,
any of that. It was the first time I had gone into like a real luxury complex and all, and so I didn't know to ask that stuff.
Yeah.
Oh my god. Yeah, no, it was so down atrocious for.
Yeah. Honestly, I tried to stream on the Marriott internet at the hotel, and usually it's okay. Usually the internet's not bad, bro. At the hotel, it was literally running like one. Oh
no, they banned it. Yeah,
yeah,
what's
dude.
it called?
It was hard.
Why can't I think they throttle you? That's right.
Here's the thing, though. Let me ask you guys a question here, okay? Say I bought Starlink. Would I be able to just bring Starlink anywhere and set it up in my hotel room and still get that type of internet wherever I go? Because that might be a justifiable business expense in that way. If I could just kind of bring my Starlink satellite internet wherever I go on the plane or wherever and just have internet, not on the plane.
Yeah, I would actually talk to Doug about that. That's like literally his thing.
That's his
niche, that is literally what he does. So I would 100% talk to Doug about that.
Douglas, there you are. Let me know, bro. Let me know.
That's the field of tech I don't go into. That physical IT and server side. I do the server side programming and all the virtual servers and all that fun stuff, but
yeah. Honestly, it doesn't even matter too much.
Campers use it.
Yeah, that's what I'm saying. They should be able to. Yeah.
Starlink has to be attached to your roof, unfortunately. Then how do campers use it?
Not necessarily, bro. It doesn't have to be attached to your roof, dude. I saw a guy on YouTube debuting it, and he had it in his living room. He just pointed it out the window.
He put it on his RV. Nice.
Yeah, you might not get as effective internet, but like you could still use it in that way. Techum says, how much does this rip have to do with metaverse? I don't think it has much to do with metaverse. I think this is more so that Facebook probably went a little bit heavier in terms of advertising to bring those MAUs and DAUs up because, again, I tend to look at these things in terms of extension, right? Like pre-earnings release, I was telling people that I'm bullish on Facebook, and the reason I'm bullish is because Facebook has lost 50% of its value in the last 6 months. It's dropping down from major levels. It's dropping down majorly, and with that, generally speaking, when a company has really bad earnings like that, the next quarter they're going to be fighting really hard to come back from that. They're going to be fighting really hard to bring their numbers up, and that's exactly what we saw. We saw Facebook numbers much better than last time, much better than expected, and that's ultimately why I think Facebook is up. I just wish I would have taken my own intuition. I caught it, and I almost bought shares. I almost bought a call option. I was looking at call options, but call options were like $1,500 for the cheapest one, and so it just didn't make sense. But wish I would have, and was 100% correct about it. Hold on. I'm not sure. Here, hold on.
Oh wait, has Starlink not IPO'd yet? Yeah, I think it IPO'd, right?
Starlink was $90 to $100 a month. Haven't checked recently. $500 for the dish. Starlink will be on Hawaii Airlines pretty soon. Yeah, I was paying for. Or go ahead.
That's why I was looking for the what's it called? Starlink staying private. Okay, yeah.
Elon's a big private guy. He, unless it's huge, he wants to keep it private because he doesn't want. Elon's had a lot of trouble in terms of like staying out the public eye in terms of his companies and the effects of that. Like he went on the Joe Rogan Experience and got fined like $25 million or something crazy. I can't remember what it was. Maybe it wasn't that high, but he got fined.
Yeah,
a lot.
He's joking about taking Tesla's stock to like
420. He said he'd take Tesla stock privite at 420. Just trolling people. It's obvious troll, but people bought it up in that way because of it.
Yeah, he got fined, but he didn't care. It was worth the meme.
Yeah, for sure. And they honestly gamed him so much pop culture relevancy that it was probably way more profitable than it was income.
I need to drop the link. I saw the video of like all of the times Elon Musk cameos in movies. Yeah. And it was like he's in Iron Man. If you didn't know,
he's in the Iron Man 1, I think. He's in Iron Man 1, the old Iron Man.
Tony Stark walks up to him and he's like, "Oh, Mr. Musk." And Elon's like, "I got a new idea for a private jet." And they're like, right away. And it's just like only Elon Musk plays as Elon Musk.
That's right, man. Elon's a gangster, bro. I like Elon.
This guy. That's what I think billionaires should be doing. Go back to like no more of these like sending millionaires to space and all this. Let's go back to building like public libraries and schools or memes like that. Let's go back to building flamethrowers. All the cool stuff.
And that's honestly a dope startup too, is the Boring Company.
Exactly.
Can you take Starlink camping?
Do you walk through a call option on TDA in the morning show? We don't, but we have Pawn who comes on afterwards at around 10:30 sometimes, and he does that. But if you want to, you can hit him up in our Discord too, anytime you want for questions about that stuff.
Yeah, for sure. Pawn knows a lot about options. He was the guy that joined really quick. He was going to help me out with my internet.
He's actually here. Clean Slate Trades.
Yeah, he's here. Good dude, smart dude. Knows a lot about options. Elon protecting us. Yeah, IPOF is what they were talking about in terms of Starlink going public, but I don't think it's going to happen. I think Elon, especially after this Twitter thing, he wants to take everything private. Public.
No, I was just curious because if Starlink was public and they're going on Hawaii Airlines and doing that stuff, if that goes good, bro, that's going to every other airline instant.
Sure. Well, there's so many uses. There's so many uses for an effective satellite internet, like far more than
like American Airlines and all of that have it. You can pay and it's all right. I've used it. It's not that crazy, but like if you could start like streaming and all that stuff, you didn't have to have all that pre-recorded stuff. Like not streaming like that. I mean like live streaming movies. I guess you could live stream, but all that stuff, like high-speed internet, no matter where you go, every car, everything, bro.
Yeah.
Wild thought.
Yeah, it's widely useful. Like widely useful. You can do like people like me who stream like as a job. Like I go from place to place a lot. And I need internet, and luckily the mobile hotspot on my phone is good enough to where I can stream. Like when I was on vacation, I only streamed from my mobile hotspot, and we ran better numbers than the hotel I was at with my mobile hotspot. And so luckily mobile hotspots are at that point. But a widely used satellite internet that's effective, like previously to Starlink, there was no really good satellite internets. They were really, really expensive. They were like $300+ a month, and then they weren't that good. I remember a buddy of mine tried playing Xbox Live one, and he just did not. He couldn't do anything.
Oh no! I have
terrible.
One of my clients is. Well, I can't disclose them, but let's leave it at they own a lot of large yachts, and they hired us to come out there and install that same satellite internet. We ended up basically just custom programming a small portable router that tapped into other stuff and helped give that kind of broadband coverage and all. I can't really go into a lot of all of that because they don't really want me talking about it. But long story short, it was so bad. It was so slow and so annoying that they're just like, no offense, bro, but like, we don't even want you to continue on this. And it's not you, it's that this is just garbage. It's like, it's just we want to stream movies and stuff out here on the, to our guests and all that. And we can't do But
Right.
it's gotten
Exactly.
way better since then. Don't get me wrong. It's gotten way, way better since then.
Yeah, for sure. It has. This was like 10 years ago when I was in Canada. I remember wanting to use it so I could play Xbox Live, and I just never could. But yeah, it's gotten better. And Starlink is really like, I have a buddy of mine. The reason I know Starlink will get really, really big, and it's already really big, is because I have a buddy of mine who lived out in the middle of nowhere in Clinton, Louisiana. Clinton, Louisiana. One of my best friends. He lives in Clinton, Louisiana. And so, being like my best friend, I try to play Xbox Live with him all the time. Like one of the ways we hang out is through Xbox. Like we play Halo, we play video games together. And with that, his internet was always so terrible, so freaking terrible. Like it never worked. He would lag anywhere. He was the guy that would be in the party and that would just be lagging the party up, and everybody else was just kind of like, bro, get your internet fixed. And it would just never work. I think he had DSL is what he actually had.
Oh my god.
Yeah, so it was really
he had
old
dial-up, bro.
Yeah, dude. It was DSL is kind of like a middle
Hop off the phone, honey. I gotta
Yeah,
kill
dude.
this guy on Halo.
And it was terrible, bro. Yeah, anytime we play Overwatch and we just get destroyed because his internet was horrible. And so eventually he told me like about a year ago, he said, hey, Starlink's coming to my area. And me and my other friends were just kind of like, yes. And he finally got it. He finally got it like 6 months ago. We hadn't had a lag problem once with that. Like it works seamlessly, and he's kind of in the middle of nowhere too. And so that is the real use for Starlink. It's just people that need it like that.
Yeah, I always feel so bad for all the kids when you meet them in the game and they're just telling you the story about, I live out in a cabin in the woods or something like that. And I'm like, I got internet, and they're like, I got to download the Fortnite update. I start it before I go to school and I come home, and
that's what he
I'm
would
like,
do.
bro, it's a 20 gigabyte update.
Yeah, bro, updates, like downloading a game. Like,
you guys remember that though? How bad that was?
Yeah, bro. Well, dude, the worst part is when like you download your games off the internet. Like you buy your game and then you have to download it off the internet, bro. We would wait for the debut of a game, like when Halo Infinite came out. We'd all be sitting there waiting for him. We'd be like, all right, bro, we got the game. We're about to play. And we're like, how much time you got left? And he would be like 14 hours. So it's going to take him 14 hours just to download the game he just bought. And so it was really anticlimactic after a certain point, Had to pay 15, rural America. But no. Luckily, my internet, I buy myself. Like, I need to have good internet. I have like 100-foot Ethernet cord. It might be like a 50-foot Ethernet cord, actually. But I've got like a ridiculously long Ethernet cord that like my whole family hates it because anytime my internet goes out, I'm dragging a huge cord through my house to like get it up, Especially if I have to download something. Yeah.
Oh, you don't use fiber?
Oh, no, I don't have fiber.
Not fiber. You don't use wired? You're on wireless
right now? Use wired for my computer.
Okay, I was gonna say. Yeah, I was gonna say.
Yeah, but like for my Xbox and like I play Xbox in my bedroom mostly.
Okay,
so my Xbox
wired house. But I was gonna say if you're trading on Thinkorswim and you're on wireless, maybe that's why it's so laggy, bro.
Well, streaming, dude, it's both. Like I'm connected to wireless and I have the Ethernet cord plugged in too, so it's both. It's just Comcast. I even asked the people when they came to install Comcast last time. I said, hey, when are y'all getting fiber optic? And they basically said that they're no longer installing fiber optic. It must not have made them enough money to have the infrastructure built. And so they just stopped installing it, which is good because a new company came around and said, okay, if Comcast isn't going to install it, it's not, they have a monopoly in my area, but technically since it's pure fiber optic, it's not technically the same service. And so they're allowed to do it. And so now I'm dreaming of calling Comcast and canceling it, bro. I'm dreaming of the day. It'll be sometime in the next month or two, hopefully. I started reselling for Spectrum, trying to get the lines down.
Not bad. Smart.
Yeah. Do you think Facebook will go back to the 300 plus level off of these earnings? Off of these? No.
Probably not.
It could get on a bull run. It depends on what the market does. But off of purely these numbers, I don't think so. I think that we might get a boost to like 10-15 tops. Maybe not though. I mean, you never know. But I don't think these earnings are good enough to bring it all the way back to over 300.
Well, Mr. Smith, you know what you could do? You could go on stage in the earning call and slap it again. That would probably bring the earnings right up.
Yeah, for sure, man. Bring it back down, dude. Honestly, I might have to make a short about this, bro. I called this one pretty correct in terms of what I called pre-earnings. Pawn was like, yeah, you got to make a short of it. I should, I think. I have that last short that we did that worked too. QCOM did come out, Douglas.
You just clip it from YouTube, bro.
Yeah. Well, I
Like
don't know how
10
to
seconds.
download it. I can clip it, but I don't know how to download it. I guess I could just
Um,
OBS it.
you OBS it, or you can use websites that are like YouTube to MP3. Just be careful because YouTube to MP4. Just be
There's some
careful because
viruses in there.
yeah.
Yeah, 176 tomorrow morning. I don't think so. I mean, it could. I don't think it's going to correct all the way back down. They dropped good numbers. There's a reason. There's optimism, and I think Facebook is just so polarized that it kind of blinds people in both directions. I think a lot of people just hate Mark Z and they hate Facebook, and I get it. I really do. I understand. But I think in terms of like stock health, I think Facebook will be fine. At least
They're
short
one of
term.
those too big to fail companies where it's like no matter what they do, they're going to be profitable for a while. Once you start
Yeah,
making billions of dollars and people are still using your stuff, it's hard to
fail.
fail completely.
Yeah,
You
like
know?
public sentiment can change, like which is what influenced this. But if you look at their DAUs, their daily active users, it's still about 2 billion people use Facebook every day. That's still about a quarter of the world, a little bit, or no, that's what like
I would
a sixth of the world.
drastically change that number down. It's no way it's actually 2 billion.
Yeah, well, they're gonna boost
Most
them.
of that is bots, and most of that is fake numbers. I can promise you from the amount of people I personally see if they use Facebook and it's not that it's
See,
dead. It's not that it's dying. It's just
I don't know. I'm older, bro, so I grew up in that Facebook generation. Like this
I
is
did
when
too. I
this
did
is
too.
the
I
time.
was the king of
Well,
Farmville, Fish Tank Mania,
yeah. Well,
everything,
see,
bro.
well, I grew up before that though. So when I grew up, this is kind of the trend of social medias from when I was like a teenager, right? And to where I was about your age too. Is like I went from MySpace. So I had MySpace originally. MySpace was my first social media. And so on MySpace, if you've never used it before, especially back then, MySpace was kind of like it was kind of like you would code it with HTML and CSS. And so you would code your own page and you could throw like music on it. So when you go to your profile, you could see like music and you could add pictures and you could really customize your page with colors, music, and pictures and you used HTML and CSS. So it was really my first introduction to code. But then at about 2007, 2008, Facebook
Everyone
came out.
switched,
Yeah, everybody
You remember
switched.
that big thing? Well, I guess no, you probably weren't affected, but there was a dude who put some. It was one of the like big cross-site scripting injections. He put a bug on there, or he injected some code onto his page, where anytime you came to his page, it then copied that code onto your page and added him as a friend. There was nothing malicious. It was just this dude overnight has like 13 million friends on MySpace.
Yeah, I remember that. Honestly, and it was a smart move. I mean, I'm not saying you should do it, but like back then when we had pretty elementary like technology in terms of social media, it was an easy thing to do, I'm sure, and he became popular. But no, I'm in my early 30s, guys, if you want to know how old I am. Joe over there, like John must be 55. I remember MySpace, bro. MySpace had like a top, it was kind of like drama, bro. There was controversy about MySpace. You had like a top 10 friends, and like you were always having to like put somebody out of your friends. Somebody messed up, bro, you delete them from your top 10. You know what? Shots fired with that, bro, and people would get mad. And then I remember Facebook switch. Facebook, the big thing that changed Facebook was the relationship status. So you could say, hey, I'm in a relationship with such and such, and that's why it was valuable, because all the girlfriends wanted their man, and all the boyfriends wanted their girl to list them as their relationship status on Facebook. And so that's kind of why it became big, is because it was a way to really call out who you were with. Microeconomic issues likely also dampened ad spending with higher interest rates and supply shortages, both negative factors. Facebook weaknesses reflect Apple's privacy change, which has hurt advertisers' return on ad spending. That means they're not willing to spend as much per ad on Facebook. Yeah, Facebook ads, I've used them widely. I've spent thousands of dollars on Facebook ads before, and they can be effective. You really got to test them. And Bobby knows about that. You really got to test them and do A/B testing with Facebook ads, but they can be effective for sure.
The biggest thing when it comes to ads, all of it works. It really does, or else it wouldn't be a multi-billion-dollar industry. Right. You just got to ask yourself, am I selling something that people actually want? Number one. Right. And number two, am I presenting it in a way that they're actually going to want to see? Because if you're just having buy my garbage with a terrible picture and a bunch of text to read and just a link to buy, of course it's not going to work. You're not providing any entertainment and you're not providing any physical value. So think about it. Put yourself in flip the roles, right? You're being sold to. Would you want to see your ad?
Right.
And before you say, well, of course I would. It's my ad. Well, come on, bro. Really? If it didn't convert at all, I don't know what to tell you.
It really is. And it'll add up fast to where it's like one thing that I would like, I experimented a lot with it too. But it's like you said, bro, you just got to do it right. And it's a good way to grow. Like if you have enough money, it's one of those things where like you can grow on social media pretty easily. Tesla, whoa, man, Tesla, this drop just scared me on Tesla. Look at this Tesla drop.
Dang.
I thought Tesla just tanked $10 a share. Yeah, no doubt shots fired when you had to shuffle them top 10 friends. Yeah, you had to be invited. You cannot just join, so it was exclusivity. Yeah, for sure. Facebook has too much cash for this valuation. Soon we'll see results. Yeah, I tend to think that Facebook really is earning a lot of money from both Facebook and Instagram advertising. They're earning a lot of money. I'm only 62. I've been trading since 22. How was that, Roy? You took part in the pit trading? Pit trading looked dope, dude. I wish I grew up in the pit age, like Ferris Bueller. There's some really good documentaries for all my like stock market, cravers, like people that crave stock market content. Watch a movie called The Pit. The Pit. It's really dope, dude. It would have been really cool to live at that time, of where you kind of go in this arena and like haggle with everybody. Seems fun. You can kind of see where the OG stock market guys started. Mostly futures contracts, so like coffee, oil, gas. ZM. Yeah, so we're waiting. The earnings call starts in about 4 minutes, guys. 4 minutes. There's 97.50s here for ZM. 97.50s. Tesla didn't drop $10. It's late post trade from 4 p.m. Yeah, for sure. It's just an old, it's old fill or a lower fill getting in there.
But I gotta head out, guys. But before I go, the last thing I'm gonna say is don't forget to check out Discord, our Discord. Don't forget to become a member on Beginner Trading's website. It's completely free. You get access to tons of awesome stuff, a daily watch list, the live stream.
I'll post the link.
We do coaching where we take members and we literally watch you guys trade and we give you feedback about what you can do better. Access to what's it called, course planners and all that fun stuff. All the stuff you can be paying thousands of dollars for, completely free. And the last note on that is, if you're struggling with your own business with social media or with ads and stuff like that, look at what we're doing, right?
Yeah,
why is what we're doing working? Because we're providing good quality content. I'm not saying copy us, because if you copy us, it's not going to work. You have to have your own personality to do it.
Right.
That's just it, though. There's no personality in just a sale, right? There's no personality in just, here, John, buy my, John, I want you to buy this new website stuff from me. And I just put I just say, here's the price. You two can have it. No, I'm going to show you. I'm not going to give away the rest of those tips. I'm going to stop myself.
I'm good, bro. No, I'm good, man. 100%, man. 100%. And yeah, I post the link. Becoming a member is completely free, guys. Becoming a member is completely free. There's the link right there in chat. Discord link is right here as well. So join the community. Big community. Everything is free. So we don't charge for anything. We all put everything out there for free. And so hit the subscribe button, guys. You know you want to. The live stream should start in 2 minutes. Everybody thank Bobby for being here as well.
Appreciate you guys. Y'all are the best. John's the best for hosting it for you guys. Really cool that he's out here a second time. Give him some special thanks for that. 2 streams after a vacation with everything. That's a lot. You know what I mean? So, alrighty, guys.
Yeah. Thanks, bro.
Have a great Friday. Have a great rest of your Wednesday. Bro, my boy was telling me it was Friday this whole day. He's flying out to Texas too, by the way.
Oh, nice, man. Hey, I'm glad to be home. But
me too, bro. Me too. I was on vacation and all, but my stomach's so bad the past 2 days, bro. It was horrible. But anyways, all right, you guys.
Bro. Thanks, dude.
Good luck in the earnings call.
Thanks, man. See you, bro. Watching the newspaper, calling my broker. Yeah, I bet. Honestly, there was some really powerful sympathy moves, I'm sure. All right, Facebook is up there. Facebook puts. Yeah, I was trying to buy Facebook calls pre-bell. All right, here, guys. Less than a minute. Still waiting. Vote on the poll right now. Facebook bull, Facebook bear. Most people are Facebook bulls. 56%. sold Facebook too fast. Sad. Yeah, Facebook's still ramping up here, guys. Look at it. It's at 204s, 13s. It held support at 200, which is what it needed to do. We'll see how everything's affected by the earnings call. 80% of Facebook is owned by institutions. All right, guys, let's see. Still waiting for the earnings call to start. It's supposed to be right now, right? Oh, wait, this is PayPal. What? I'm sorry, guys. This is PayPal. Let me go to Meta. I'm on the wrong one. It's all right. All right, here's the earnings call starting now. Let me join it real quick. All right, guys. Still waiting for the earnings call. Not live yet, so still waiting. All right, guys. So the earnings call should start pretty soon. Here it is.
All
right, let me know if you can hear it.
And answer session. If you would like to ask a question during that time, please press the 1 and then the number 4 on your telephone keypad. The call will also be recorded. Thank you very much. Ms. Deborah Crawford, Meta's Vice President of Investor Relations. You may begin.
Thank you. Good afternoon and welcome to Meta Platforms' first quarter 2022 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, Sheryl Sandberg, COO, and Dave Wehner, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our annual report on Form 10-K filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today.
Sound
and we undertake
good?
no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone, and thanks for joining us today. We made progress this quarter across a number of our priorities, and our community continues to grow. More people use our services today than ever before, and I am proud of how our products are serving people across the world during what has been a difficult period for a lot of people. I talked last quarter about some of the near-term challenges facing our business. Some are specific to Meta, like our transition to short-form video, which doesn't monetize as well for now, but which we're quite optimistic about over the long term. Some are specific to our industry, like signal loss resulting from Apple's iOS changes, which is a meaningful headwind, but we also expect that with the right technology investments, we'll navigate okay over time. Other challenges are broader macro trends, like the softness in e-commerce after the acceleration we saw during the pandemic. The war in Ukraine, which is a real tragedy on a humanitarian level, has also had an impact on our business. We've been blocked in Russia, and we decided to stop accepting ads from Russian advertisers globally. And we've also seen effects on business globally following the start of the war. Taking a step back, I want to share some thoughts on our business trajectory and operating philosophy. First, I think it's useful to level set on our business trajectory over the last few years. After the start of COVID, the acceleration of e-commerce led to outsized revenue growth, but we're now seeing that trend back off. However, based on the strong revenue growth we saw in 2021, we kicked off a number of multi-year projects to accelerate some of our longer-term investments, especially in our AI infrastructure, business platform, and reality labs. These investments are going to be important for our success and growth over time, so I continue to believe that we should see them through. But with our current business growth levels, we are now planning to slow the pace of some of our investments. Dave will give more detail in his commentary. I also want to share how I'm thinking about investments and margins. Last year, we began looking at our business as two segments, Family of Apps and Reality Labs. On the Family of Apps side, I am confident that we can return to better revenue growth rates over time and sustain high operating margins. In Reality Labs, we're making large investments to deliver the next platform that I believe will be incredibly important both for our mission and business, comparable in value to the leading mobile platforms today. Now, I recognize that it's expensive to build this. It's something that's never been built before, and it's a new paradigm for computing and social connection. So over the next several years, our goal from a financial perspective is to generate sufficient operating income growth from Family of Apps to fund the growth of investment in Reality Labs while still growing our overall profitability. Now, unfortunately, that's not going to happen in 2022, given the revenue headwinds. But longer term, that is our goal and our expectation. Of course, our priority remains building for the long term. So while we're currently building our plans to achieve this, it is possible that prolonged macroeconomic or business uncertainty could force us to trade off against shorter-term financial goals. But we remain confident in our long-term opportunities and growth. Now, with that, I want to dive deeper on what we're seeing in three of our main investment priorities that I expect to drive this growth: Reels, ads, and the metaverse. So let's start with Reels. There are two key trends that we're seeing here. First, the increasing popularity of short-form video, and second, the advancement of AI recommendations driving more of our feeds rather than just social content. On the first point, since I started Facebook 18 years ago, we've seen multiple shifts in the media types that people use. And we started as a website, primarily with text. Then people got phones with cameras, and the main format became images on mobile apps. In the last several years, mobile networks have gotten faster, and now video is the main way that people experience content online. Short-form video is the latest iteration of this, and it's growing very quickly. Reels already makes up more than 20% of the time that people spend on Instagram. Video overall makes up 50% of the time that people spend on Facebook, and Reels is growing quickly there as well. The second point is that while we're experiencing an increase in short-form video, we're also seeing a major shift in feeds from being almost exclusively curated by your social graph or follow graph to now having more of your feed recommended by AI, even if the content wasn't posted by a friend or someone you follow. Social content from friends and people and businesses you follow will continue being a lot of the most valuable, engaging, and differentiated content for our services, but now also being able to accurately recommend content from the whole universe that you don't follow directly unlocks a large amount of interesting and useful videos and posts that you might have otherwise missed. Overall, I think
we're live,
AI that we're building not just as a recommendation system for short-form video, but as a discovery engine that can show you all of the most interesting content that people have shared across our systems. In Facebook, that includes not just video, but also text posts, links, group posts, reshares, and more. On Instagram, that includes photos as well as video. In the future, I think that people will increasingly turn to AI-based discovery engines to entertain them, teach them things, and connect them with people who share their interests.
Potentially.
And I believe that our investments in AI, all the different types of content we support, and our work to build the best platforms for creators to make a living will increasingly set our services apart from the rest of the industry and drive our success. And we're also finding that having an ambitious vision around building the world's discovery engine is attracting a lot of the most talented AI folks to work on this program. Next, let's talk about ads. Sheryl will discuss this in more detail, but I want to highlight that this is also a large AI investment for us. There are three main trends to highlight in our ads business right now. First, we're managing headwinds from the shift to short-form video that I just mentioned. In the near term, this is a drag on revenue because Reels monetization is less than feed or stories, but I expect that will improve over time. We've seen this type of media format transition multiple times before. Back in 2012, when we transitioned from desktop feed to mobile feed, we saw mobile feed growing massively but not monetizing well yet, and we leaned into it, went through some tough quarters, and then it became the foundation of our business today. Similarly, in 2018, when people started using stories more instead of feed, but stories didn't monetize as well as feed yet, we still doubled down on stories, had another tough period, but came out stronger than ever. So we've run this play before, and we're running it again now.
Yeah, they got to pivot.
We're focused on growing Reels as a major part of the Discovery Engine vision, and we expect that this expansion in engagement to shift from a short-term headwind to a tailwind at some point. Now, while this is playing out, we're also managing the headwinds from signal loss that we've discussed a lot recently. This means growing first-party understanding of what people are interested in by making it easier for people to engage with businesses in our apps, whether that's completing purchases on Facebook or Instagram, or messaging businesses on WhatsApp or Messenger. It also means making sure that we build the best privacy-enhancing technologies to provide accurate targeting and measurement to advertisers, even when purchases aren't happening within our apps. We're making major AI investments to build the most advanced models and infrastructure in the industry. Over the next year or two, we hope that this drives better recommendations for people, higher returns for advertisers, and increases our revenue growth,
Yes,
even in the
Ben.
face of signal loss. Over the longer term, I think that these large technology investments can provide a sustainable competitive advantage over others in the industry. The last priority that I want to discuss today is the metaverse. Because while we're focusing on the biggest opportunities and challenges of today, I think it's important to build the foundation for the next era of social technology as well. The centerpiece of our strategy is the social platform that we're starting to build with Horizon. It's still early, but as we build out the experience, the next focus will be on growing the community. We plan to launch a web version of Horizon later this year that will make it easy for people to step into the metaverse experiences from a lot more platforms, even without needing a headset. I think the best experience will be on virtual and eventually augmented reality platforms, and especially on our platforms like Quest, where in an upcoming release, from the moment you put on your headset, you're going to be embodied with your meta avatar and ready to interact in Horizon with your friends right from your Quest home. But making this available everywhere will mean that you can interact with anyone on whatever device or platform that they want to use. Our other focus for Horizon is building out the metaverse economy and helping creators make a living working in the metaverse. We expect to be meaningfully better at monetization than others in the space, and we think that that should become a sustainable advantage for our platforms as they develop. On the hardware side, Meta Quest 2 continues to be the leading virtual reality headset. Later this year, we'll release a higher-end headset codenamed Project Cambria, which will be more focused on work use cases and eventually replacing your laptop or work setup. This premium device will have improved ergonomics and full-color pass-through mixed reality to seamlessly blend virtual reality with the physical world. We're also building in eye tracking and face tracking so that your avatar can make eye contact and facial expressions, which dramatically improves your sense of presence. It's also a good example of why we're developing hardware in addition to the social platforms. We're bringing Horizon to more platforms, but if you want to be able to make eye contact or have your physical facial expressions just automatically get translated to your avatar in real time, then our hardware will provide the best metaverse experience, whether you're playing a game or meeting with coworkers in Horizon workrooms.
That's crazy.
We'll share more details about Project Cambria in the months ahead as we get ready to launch it. I believe the areas that we've discussed today are the right places for us to be doubling down on our work. The questions we face are not going to be resolved overnight, but we've also faced a number of these challenges before, so I'm confident that we can navigate this period while continuing to invest in our future. I'm grateful for everyone on our team who is executing on this important work, for our partners, and for our investors who believe in us and the future that we're building together. And now, here is Sheryl.
GA, this is the live conference call that is live for everybody, and I'm just reporting it.
Our total ad revenue in Q1 was $27 billion, which is up 6% year over year.
This is his conference
call.
We
saw solid growth in APAC and rest of world, but a more challenging environment in North America and Europe.
Despite the headwinds Mark described a moment ago, we saw meaningful growth in areas like video ads and click-to-messaging ads. The changes to the ads landscape over the last year have caused significant disruptions to the way many businesses advertise online. Our teams are working closely with our partners to help them navigate this new environment.
That's right.
So they can continue to get great return on investment. And we're focused on building products and tools that grow their businesses and ours over the long term. I want to pick up on what Mark said about our ad strategy. As he described, it's focused on three main areas. One, growing video monetization, especially short-form video like Reels. Two, evolving our ad systems to do more with less data. And three, investing in AI and machine learning to support our ads infrastructure. First, video. Half of the time spent on Facebook is video, and video surfaces on Facebook were a significant source of revenue growth in the first quarter. People already watch a lot of longer form video content that's eligible for in-stream ads, which we monetize well. Stories monetization continues to grow across Facebook and Instagram. And with Reels growing quickly, there's also a big opportunity as we get better at monetizing short-form video over time. We've accelerated our efforts to improve the Reels ad format. Our experience monetizing stories is directly applicable here. Sorry.
Yeah, well, it's a live person. You can tell by she's coughing. Ooh, Marksy's gonna be mad.
We're leveraging what we learned with Stories ads to create ads for Reels that have a native format, perform well, and are easy for advertisers to create. We're working closely with our partners to help them make the most of the opportunity with video,
Thank you,
like
Ben.
experimenting with new formats and with campaigns that utilize multiple types of video ads. A great example is the U.S. restaurant chain Wendy's. They used a range of video formats across Feed, Stories, Reels, and InStream to promote their March Madness campaign, driving consumers to the first virtual Wendy's restaurant in Horizon Worlds. We also worked with them to promote the campaign in Horizon Worlds itself, with a virtual welcome screen directing people to what they called the Wendyverse. The campaign was a big success, reaching 52 million people and improving Wendy's brand and message awareness across a number of metrics. Second, evolving our ad system. Our focus is on paving the way for the next era of personalized advertising, and there's work we're doing over the near, medium, and long term. In the near term, we're working closely with advertisers to help them navigate the new landscape while we evolve and improve our ad solutions. For example, we're encouraging partners to integrate with our Conversions API to create a direct, reliable, and privacy-safe connection between their marketing data and Meta. And we've recently introduced a faster and easier way for SMBs to integrate with it called the Conversions API Gateway. One way we're helping advertisers get better insights with less data is with conversion modeling. This can help them understand measurement and campaign performance, even when we're not able to see or aggregate certain conversions. We're also helping businesses connect directly with customers and grow more on-site data conversions through products like click-to-message ads. This is where you click on an ad in your Facebook or Instagram feed, and it opens a chat with the business in Messenger, Instagram Direct, or WhatsApp. It's already a multi-billion-dollar business with healthy double-digit year-over-year growth in Q1. A great example is Deichmann, Europe's largest footwear retailer. They've built a fully automated virtual shoe assistant to give customers personalized footwear recommendations and promoted it through click-to-messenger ads on Facebook. They had an 85% click-through rate and saw 30% more incremental purchases than with their usual link ads. In the medium term, we see an opportunity to grow other on-site conversion products like lead ads, which make it easier for businesses to generate leads, and shop ads, which direct you to a brand's digital storefront on Facebook or Instagram. It's still very early for shop ads, but we think driving people to shops can be a compelling objective for commerce advertisers as we continue to improve our on-site commerce tools. Over the longer run, we're also developing privacy-enhancing technologies which will help us minimize the amount of personal information we process while still allowing us to show people relevant ads and measure performance for advertisers. And we're collaborating across our industry on these and other standards that will support this next era of personalized advertising. Third, AI and machine learning. which are crucial components of these privacy-enhancing technologies and will drive improvements over time to our ads ranking and measurement capabilities. We're significantly increasing our investment in AI and machine learning across the company this year, and a large portion of this is going towards ads. We continue to innovate in order to deliver better performing ads in general, and these investments will help us do that while processing less individual level data. We also have a range of automated tools to make it easier for advertisers to create, manage, and improve the performance of their ad campaigns. We're constantly working to improve these tools and make them simpler for advertisers to use. Taken together, we think our range of solutions can help advertisers get better results now and over the longer term. We're confident our apps will continue to be the best places for advertisers to reach people where they get measurable outcomes long into the future. As ever, I want to say thank you to our partners, large and small, and to our teams who are working so hard to deliver great results for businesses everywhere. Now, here's Dave.
Thanks, Sheryl, and good afternoon, everyone.
Do you think they're going to be able to monetize short-form video content?
Comparisons are on a year-over-year basis unless otherwise noted.
They can find
total
ways.
Revenue was $27.9 billion, up 7% or 10% on a constant currency basis. Had foreign exchange rates remained constant with Q1 of last year, total revenue would have been about $893 million higher. Q1 total expenses were $19.4 billion, up 31% compared to last year. In terms of specific line items, cost of revenue increased 17%, driven primarily by core infrastructure investments, payments to partners, and content-related costs. R&D increased 48%, mainly driven by hiring to support Family of Apps and Reality Labs. Marketing and sales increased 16%, mainly driven by hiring and marketing spend. And lastly, G&A increased 45%, driven mainly by legal-related costs and employee-related costs. We added over 5,800 net new hires in Q1, the majority in technical functions. We ended the quarter with over 77,800 full-time employees, up 28% compared to last year. The first quarter operating income was $8.5 billion, representing a 31% operating margin. Our tax rate was 16%. Net income was $7.5 billion, or $2.72 per share. Capital expenditures, including principal payments on finance leases, were $5.5 billion, driven by investments in data centers, servers, network infrastructure, and office facilities.
You see right here.
Free cash flow was $8.5 billion. We repurchased $9.4 billion of our Class A common stock in the first quarter, and we ended the quarter with $43.9 billion in cash and marketable securities. Now moving to our segment results. I'll begin with the Family of Apps segment. Q1 total Family of Apps revenue was $27.2 billion, up 6%. Q1 Family of Apps ad revenue was $27 billion, up 6% or 10% on a constant currency basis. Growth decelerated from the fourth quarter due to a variety of factors. Prior to the war in Ukraine, we faced expected headwinds related to the continued slowdown in our online e-commerce vertical, which had grown quickly during the COVID-19 pandemic, as well as ongoing targeting and measurement challenges impacting advertising spend. We experienced a further deceleration in growth following the start of the Ukraine war due to the loss of revenue in Russia, as well as a reduction in advertising demand both within Europe and outside the region. We believe the war introduced further volatility into an already uncertain macroeconomic landscape for advertisers. Foreign exchange rates were also a headwind to growth in the quarter. On a user geography basis, year-over-year ad revenue growth was strongest in rest of world and Asia Pacific at 21% and 20% respectively. North America grew 1% and Europe was flat year over year. Europe advertising revenue was disproportionately challenged by the factors related to the war in Ukraine. In Q1, the total number of ad impressions served across our services increased 15% and the average price per ad decreased 8%. Impression growth was driven primarily by Asia Pacific and rest of world. The year-over-year decline in pricing was driven primarily by the ongoing mix shift in ad impressions towards regions and services that monetize at lower rates. Family of Apps other revenue was $215 million, up 9%, as revenue growth from the WhatsApp Business API offset a decline in payments-related revenue earned from games. Family of Apps expenses were $15.7 billion, up 27%, driven mainly by employee-related expenses, infrastructure costs, and legal costs. Family of apps operating income was $11.5 billion, representing a 42% operating margin. We estimate that approximately 2.9 billion people used at least one of our family of apps on a daily basis in March, and that approximately 3.6 billion people used at least one on a monthly basis. Facebook daily active users were 1.96 billion, up 4% or 82 million compared to last year. DAUs represented approximately 67% of the 2.94 billion monthly active users in March. MAUs grew by 83 million or 3% compared to last year. Europe DAUs and MAUs declined sequentially and were negatively impacted by the loss of users in Russia following the government's block of Facebook in the country. We expect this trend to continue in the second quarter, and this will likely cause global MAU to be flat to down sequentially. Within our Reality Labs segment, Q1 revenue was $695 million, up 30%, driven by Quest 2 sales. Reality Labs expenses were $3.7 billion, up 55%, driven by employee-related costs, R&D operating expenses, and cost of goods sold. Reality Labs operating loss was $3 billion in the first quarter. Turning now to the outlook. We expect second quarter 2022 total revenue to be in the range of $28 to $30 billion. This outlook reflects a continuation of the trends impacting revenue growth in the first quarter, including softness in the back half of the first quarter that coincided with the war in Ukraine. Our guidance assumes foreign currency will be approximately a 3% headwind to year-over-year growth in the second quarter based on current exchange rates. In addition, as noted on previous calls, we continue to monitor developments regarding the viability of transatlantic data transfer and their potential impact on our European operations, and we are pleased with the progress on a political agreement. Turning now to the expense outlook. We expect 2022 total expenses to be in the range of $87 to $92 billion, lowered from our prior outlook of $90 to $95 billion. We expect 2022 expense growth to be driven primarily by the Family of Apps segment, followed by Reality Labs. We expect 2022 capital expenditures, including principal payments on finance leases, to be in the range of $29 to $34 billion, unchanged from our prior estimate. Absent any changes to U.S. tax law, we expect our full year 2022 tax rate to be above the Q1 rate and in the high teens. In closing, our advertisers are adjusting to a new digital advertising landscape brought about by recent mobile platform changes while navigating a complex set of macroeconomic challenges. Given the resulting revenue headwinds, we have adjusted our plans for hiring and expense growth this year. We continue to see a lot of opportunity across our investment priorities and remain committed to dedicating additional talent and capital towards these areas while ensuring our investment plans are appropriately calibrated to the operating environment. With that, France, let's open up the call for questions.
All right, so here's the Q&A.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your
I'd like to ask
phone.
a question one day.
Please pick up your handset before asking your question to ensure clarity.
And yeah, I think
If
they're going to
you
be able to
are streaming
monetize
today's
short
call,
form
please
content.
mute
I
your
think there's
computer
ways.
speakers.
Wait till the end of the video and then
And our
place an
first
ad is
question
probably the most
is from
effective.
the line of Brian Nowak with Morgan Stanley. Please go ahead.
Brian Novak, Morgan
Thanks for taking my
Stanley.
questions. I have two. The first one on Reels engagement. Appreciate the color about the percentage time it's going through Reels. Wanted to ask about the incrementality of that time. Maybe can you talk to us a little bit about what you're seeing on total time spent on both core Facebook as well as Instagram in the US as you're seeing this really strong Reels engagement moving through the overall user base? And then the second one, Dave, I wanted to ask you about CapEx. Understanding this year there's investments in AI and machine learning, et cetera. How should we think about how much of this year's CapEx is sort of one-time-ish, they may not persist on a multi-year basis, or is it better to think of it as maybe the capital intensity of the business could just be structurally higher going forward? Thanks.
Hey, Brian, I'll take a crack at both of those, and then Mark can add any color if he wants. In terms of cannibalization, Reels does pull time away from other surfaces, but we do believe it's additive to overall engagement. And we've seen that in the past with other products like Stories, and so we're seeing a similar pattern there. In terms of overall engagement for both Facebook and Instagram, there's a lot of complexity with kind of looking through the period of COVID, because that tends to create a lot of different peaks and troughs in engagement. But if you look back, engagement for both Facebook and Instagram remain above the levels they were at pre-pandemic, and that's true both globally and in the US. So I think we're pleased with that. On the capex front, let me just sort of address the overall ramp. It's true we are investing significantly in AI and machine learning investments, to power ranking and recommendations for things like ads, reels, and feed, and so that does add to the capex intensity of the business, and we do think there is additional capital intensity of the business as we make significant investments in AI and machine learning on top of just additional capacity growth. We're not sharing an outlook beyond 2022 at this point. France, you can go to the next question.
Our next question is Eric Sheridan with Goldman Sachs. Please go ahead.
Thank you so much for taking the questions. Maybe one big picture and one more micro question. Mark, I think
yes,
one of the
this report is
questions we
real.
get the most from investors is when you think about where you're trying to go with the metaverse longer term, how do you think about the investment cycle versus the monetization cycle when you think about creating hardware, both on the physical side and the distribution layer for hardware versus the content and the creator cycle you need to solve for on the metaverse over the medium to long term? And second, I don't know if I missed it or not, but I think last quarter you called out on the Apple privacy changes that the headwind might get worse in Q1 than it was in Q4. Can you give us an update of how those headwinds continue to evolve and whether what you've built over the last couple of years have somewhat future-proofed against future changes that Apple might make in the iOS ecosystem? Thanks so much.
Yeah, no problem, Flash.
Yeah, I can give some context on the first one, and then Dave can speak to the second question.
So here's Mark Z.
The cycle here between investment and meaningful enough revenue growth to be near or very profitable is going to be long. I think it's going to be longer for Reality Labs than for a lot of the traditional software that we've built. And if you think about just a bit of context that may be useful on why we've ramped expenses so much is, especially with the success that we've seen with Quest 2, we're now basically funding product teams to be building our future products 2 or 3 versions into the future. Because when you're designing hardware, these are multi-year plans that you're building and kind of figuring out all the pieces that are going to go into that. So we have multiple teams in parallel that we've sort of now spun up. This goes for VR as well as augmented reality and a bunch and the other work that we're doing, and is sort of driven by the success that we feel like we're seeing in the markets and the technology starting to be ready to really ramp up. So those expenses we're experiencing today, right? I mean, having those teams operating is something that you see weigh on the results, and is one of the reasons why I think the growth rates and expenses have been so high. And I think we'll continue investing more over some period, but at some point we will have all those product teams fully staffed for a few versions into the future.
It's a tough
The
project.
growth rates there will come down, but it's not going to be until those products really hit the market and scale in a meaningful way, and this market ends up being big, that this will be a big revenue or profit contributor to the business. So
it's going to be a
that's
while.
why I've given the color on past calls that I expect this to be later this decade, right? Maybe primarily this is a laying the groundwork for what I expect to be a very exciting 2030s, when this is like when this is sort of more established as the primary computing platform at that point. And I think that there will be results along the way for that too. But I do think that this is going to be
a long time.
It's going to be a longer cycle. Some of the software parts of what we're doing in the metaverse will, I think, have nearer term opportunities to monetize, and I think we'll see how that goes.
I don't think that's good for Outlook.
Certainly Horizon will roll out across all platforms, and there will be a number of things that we can do there that will have shorter cycles that might resemble a little bit more what we're used to with apps. But overall, I think that's kind of the context that I want everyone to have on that.
It's gonna be long cycle
Second part,
long
the
cycle
second
monetization.
We expect, we've expected, ongoing privacy headwinds from the iOS changes, and we continue to see them. Those are obviously factored into our Q2 outlook, along with the impact on demand that we're seeing from things like the war in Ukraine. More specifically, ATT continues to be a headwind, but we're also seeing incremental headwinds from iOS 15 and other regulatory changes. And again, we factored all of those headwinds into our Q2 outlook. Of course, any outlook on platform headwinds depends in part on the platforms themselves and how they write and enforce their policies. So I'd sort of put that caveat in as well. When you look at what we're doing to mitigate those, nearer term, we're working on improvements to our current solutions, and Sheryl talked about some of those, like privacy-enhanced technologies. Medium term, we see the opportunity to move clients more towards on-site conversions. We're seeing a lot of success in things like click-to-messaging ads, lead gen ads, and then more nascent effort in shop ads. And then longer term, we're rebuilding our ad stack to employ more machine learning and AI to be more effective at ads with less data. So, we think we've got a response that we're building into the new environment, and, we're optimistic about the future.
Our next question is from Justin Post with Bank of America. Please go ahead.
It's going to take them so long to profit. That's the problem.
Follow on. You gave an outlook for maybe $10 billion headwind this year. Is it fair to assume, a decent chunk of that in Q1, and when you lap that in Q4, you could see progress? And then I think there is a lot of concern for the social companies on Apple 16 potential changes with IP addresses and other factors. In the past, you've been able to call out potential headwinds. In the future, I'm wondering if you can say anything about iOS 16 or how you're thinking about potential future Apple changes. Thank you.
They're going to say, we already said it could cause headwinds.
Yeah,
That's
sure.
it.
On the $10 billion impact, we shared our estimated, $10 billion impact on ATT last quarter to give, a sense of the order of magnitude. And we believe it's still to be that order of magnitude on the expected impact. It's not a precise point estimate, and we don't plan to update it. Also, worth noting, it's not a lapping. There was an impact from ATT in the second half of last year as well. So that's not all in the increment. There was an impact last year. Also, beyond ATT, we expect to see additional targeting and measurement headwinds from iOS 15 and other regulatory changes. I don't think we have anything at this point to share about 16. And then I think also, Justin, you asked about sort of the second half. We would expect the growth rate in Q3 to be modestly higher than the Q2 rate, since we will be lapping the first full quarter impact of ATT in Q3. But there's obviously a lot of uncertainty baked into our Q2 outlook, and that implies uncertainty in the second half as well.
Our next question is from Doug Anmuth with JP Morgan. Please go ahead.
Thanks for taking the questions. First for Mark, just curious, as AI curation of content takes over from social cues, was hoping you could talk about what some of the biggest changes will be to the user experience, and then perhaps monetization as well long term. And then second, in terms of Reels, how do you think about the timing for turning on ads more, and what needs to happen in the product for that to happen? Thanks.
Yeah, so I can talk about the AI-driven recommendations and discovery engine part, and maybe I can start to give some context on the ads too, and then someone else can jump in there. I think that the biggest shift here is that now the universe of content that are candidates to show in a person's feed is way bigger. It used to just be, okay, here are the people, here are the friends or businesses or pages that you follow. Maybe it was on the order of 1,000 or a few thousand potential posts a day that we could show, and we built a newsfeed system that could help rank those to show the most interesting ones to you at the top. But fundamentally, that was more a challenge of ranking a relatively small number of posts in the order that would be optimal. Now, it's a much more open-ended thing. There are millions of pieces of content that we could potentially show a person, and as our understanding of people and our understanding of content gets better through AI, we're now better able to, across all different content types, text, links, photos, short-form videos, long-form videos, everything, basically be able to understand what the content is about, match it more with what people are interested in, which just means that there's a lot more candidates to show people. The social content from your friends I think will continue being a lot of the most unique and valuable content in the system. So that will still be there. But in addition to that, you'll now have a lot of other interesting content. So overall, what does that mean? I think this will be it'll make the services more interesting. It'll mean that there's more interesting stuff to consume and interact with, both in Facebook and in Instagram, which should contribute to engagement over time. The parts of this that are about Reels, I think, have some specific monetization questions where we need to ramp up that format. But the parts of this which are just about showing better content in feed should actually monetize quite naturally. And that's something that I think we're going to, we're starting to see that kind of ramp up in Facebook and Instagram already as a part of the experience. On the Reels
Hit the
monetization
subscribe button,
side,
guys.
I mean, I think the main question here is, there's this cycle which, Sheryl should probably jump in and talk a little bit more about this, is just, it takes some time for all the advertisers to optimize the creative, right? It's like when we started doing stories, they had ads that were designed for newsfeed, and it just took some time for them to create effective content for stories. And I think we're going to see the same thing for Reels. And, the way we think about the pacing of this is that we do show ads with Reels, but we're going to show more as the content gets better, and as that ramps up to not be a big kind of pain point in the user experience, right? We basically match this so that way as the ads get better across all these different formats, we're willing to show more of them, and that's why improving the quality of ads has also been really important for our business. So I'm not sure if there's anything else that you want to add on that, though, Sheryl.
No, I think it's a really important thing to think about because it's something we're very optimistic about. We have great consumer engagement on Reels. We have fast growth, and we have a playbook for taking that kind of consumer engagement and rolling out ads into the experience. This is going to be a multi-year journey like Stories, but it's one we're very optimistic about. And as Mark said, it's about helping advertisers create the format of ads that match.
Congrats,
the content.
Fernando.
Now, what we've learned over time is the more we do for our advertisers, the better off we are. The more we automate it, the more we can help them target, the more we can help them form the creative. And the experience we have putting ads in Stories is directly applicable. But the other reason we're really optimistic is we think this can create great results for advertisers. And at the end of the day, advertisers are chasing ROI. They're going to go where they get a return on their investment. And while this still monetizes at a lower rate versus feed and Stories, advertisers who are using it are seeing really promising results. I'll share an example. Prose is a direct-to-consumer hair care brand, and they A/B tested adding a Reels ad placement to their usual campaign. They saw a 23% lower cost per purchase, a 52% higher unique audience reach, and 3 times higher video completion. So what that says is that this format works, not just for this advertiser, but we're hearing this from many across the board, and we think we can help a lot of advertisers adapt this in the coming years.
Our next question is from Youssef Squali from Truist Securities. Please go ahead.
Great. Thank you for taking the questions. I have 2. First, Mark, on the regulatory front, it looks like European and U.S. regulators are getting more aligned on how to proceed to address issues like antitrust and interoperability. The news on the transatlantic data transfer seems pretty positive. Just stepping back and looking at the new environment that seems to be formed, particularly between the Europeans and the U.S. regulators, do you see this as being more favorable or less favorable to Facebook? And then maybe this is for Dave. With the stock down so much, can you maybe talk about employee retention and how you think about cash comp versus stock-based comp in the current environment? Thank you.
I'll take the regulatory question. Now is a really critical and interesting time in regulation for our industry because the rules that are governing the internet are being rethought and rewritten, certainly in Europe, but increasingly around the world. You spoke about the DMA. We expect DMA to have significant challenges for our industry. We're working with European regulators on these rules. They are largely in range of what we were expecting, but the final text has not been released yet, and the details on this will matter. But overall, the regulatory environment is a real challenge for our industry. One, we think we are well set up to meet, working closely with regulators and doing things in our technology like privacy-enhancing technologies. to do more with less data. But we expect this to continue to be a significantly challenging time, not just for us, but across our whole industry.
Yeah, and Yusuf, it's Dave. So on the retention and recruiting front, I mean, I'd say, we continue to have success in recruiting, as demonstrated by the 5,800 net new hires this quarter. So, we're pleased with our ability to do that. Also, on the retention front, attrition, which has stepped up since what we experienced during the pandemic, is really still broadly consistent with levels that we had seen pre-pandemic. So, it's definitely something that we're tracking, and obviously, the stock price is something that we watch. But the trends are, relatively in line with expectations. So from that sense, we feel like we're doing okay.
Our next question is from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, hi. Thanks for taking the questions. The first, just on the strength that you saw over in kind of APAC and rest of the world, can you share some color? Is that just less exposure to the macro? Is it the new users or something else? And then the second question, Mark, last quarter you kind of gave us your priorities for the year, and with the operating expense guidance down a little bit, any color you can share on how perhaps that's affected prioritization, any changes in kind of spending intensity on some of the longer term initiatives like the metaverse versus some of the near term stuff like business messaging? Thank you.
So I'll take the first question, sort of in terms of the regional growth. So growth slowed in all regions due to pricing headwinds. Currency was obviously a headwind in all the international regions. Europe, decelerated, very meaningfully, and the existing headwinds were compounded by the effects of obviously the Ukraine war. In North America, we have a relatively higher exposure to offsite objectives, so the targeting and measurement challenges continue to impact growth in that region more. Also, I'd note that in North America, impressions were down year over year in Q1, so ad impressions were down year over year, though the rate improved from Q4. So it was primarily a demand-driven deceleration. When we look at APAC and the rest of the world, it benefited from strong demand in products like click-to-messaging ads. In rest of world, growth decelerated the least of all regions. Macro conditions in Brazil improved a bit after softness in the second half of 2021. And then in APAC, it was, relative strength was pretty broad-based, but I'd call out particular strength in India, and that's benefiting from good supply tailwinds in terms of impression growth.
Yeah, in terms of priorities, it's, our priorities are broadly consistent with what I outlined on the last call. It was the beginning of the year, so I outlined a lot of the basic focus areas for the company. Whereas on most earnings calls, I'll talk about a few areas that I've been particularly focused on. I think we're pacing some of the investments across each of these areas, but I think more importantly, we're shifting the bulk of the energy inside the company towards those high priority areas away from other areas. So, we're a big company at this point. It's not just all about recruiting and adding new people from the outside. A lot of it is, we have a lot of awesome people here, and a lot of the decisions that we get to make on a day-to-day basis are how do we direct the really talented people who are already at the company, and we want to make sure that rather than just always relying on just getting more and more new people from the outside, which we're going to keep on doing. We're recruiting a lot. I want to make sure that our teams are disciplined about reprioritizing internally. One thing that I want to add just as a bit of cultural commentary on the attrition question is, I don't think that this sort of volatility that companies face is always that unhealthy for making sure that you have the right people at companies. During COVID, we saw the attrition levels go down a lot because people didn't want to get new jobs, which probably meant that there were people who were staying at the company who didn't care that much about, what we were doing as compared to what we would have wanted. I'm just trying to lead the company in a way where we're positioning ourselves as the premier company for building the future of social interaction in the metaverse. If you care about those things, I think we're getting the best people to come work here. If you care about doing awesome AI work on stuff like the discovery engine across all of these different types of formats, we're the only place that's doing that. And I think that's a great problem, and that we're just seeing attract a lot of talent. And I know that sometimes people are critical of the ads model, but it drives a lot of value for businesses and people around the world. And I think the people who believe in that and want to see that continue to grow, I want them here too. So yeah, I mean, I think we'll see attrition go up and down over time. I think we're doing okay now, as Dave says, but I don't necessarily think that periods like this, where we're prioritizing a little bit more where we're focusing and growing, is going to be unhealthy over the long term. I actually think it's going to make us a better company.
Our next question is from Michael Nathanson with MoffettNathanson. Please go ahead.
Thanks. I have one for Sheryl and one for Dave.
Oh, good.
Sheryl,
Mo, it's right now $207.75.
It's a two-part problem, measurement and targeting. So can you give us an update on how close you are closing the gap on measurement from where you were before? And then targeting, which you said is a longer-term issue. Can you give us a sense of how quickly do you think the AI solution can maybe speed that up, and any updates in some of the consortiums that you've been talking about? And then Dave, just quickly on Reels, it's clear it's a huge part of consumption. Can you give us a quantification, if you could, on the impact of revenue from not, from having more Reels, but not monetizing at the same rate or speed of traditional newsfeed or stories? So that's my questions. Thanks.
So on the mitigation timeline, we've talked before, and I've talked before about two key challenges from the iOS, which is what you mentioned, targeting and measuring performance. We're working through mitigations on both. They're both a multifaceted challenge, and they're interconnected because better measurement leads to better targeting for advertisers. On the first, we are improving our systems as we test and learn and supporting advertisers with best practices, and we're working on automating tools that will help advertisers target better, and we have to do it with less data. We have to do more with more aggregated and anonymous data. On measurement, we've been able to close a good part of the underreporting gap and share that with advertisers, but the rest of the gap will take us longer to close. This is a particularly big challenge for small businesses because we have to work with them. We have to work with them, obviously, in a longer tail and more resource-intensive way.
Yeah, and I can.
Well, he's not going to say it's bad.
Reel's question. I think we've touched on it a few times, so I don't know if I'll have a whole lot that's additive, but it now makes up a meaningful portion of people's time on Instagram. Mark gave the stat that it's over 20% of people's time on Instagram, so that speaks to there being a good opportunity as we ramp ads in Reels, but it's very early days in terms of ads in Reels. But that being said, it's going to be, as Sheryl said, a multi-year journey. If you look at stories, stories we really began ramping in 2018, and at the end of last year we mentioned that in developed markets, stories on a sort of per time basis was monetizing at a similar rate as feed. So it took many years for that gap to close, and there's still work to be done across the world on that front. But Reels is going to be a similar opportunity, but also it will take time for us to close that gap. But given that it's a good amount of time that people are spending in Reels, that is a good opportunity for us over that time period.
Our next question is from Ross Sandler with Barclays. Please go ahead.
Yeah, just one follow-up for Sheryl, kind of related to that last question. So now that we're in this world where no one can use mobile IDs for targeting, there seems like there's a lot of interesting new ideas kicking around the industry around like cohort-based targeting or contextual or other kind of ID-free, privacy-centric targeting techniques. So my question is, given the size of Facebook and all the first-party data that you have, how do you think some of these new techniques are going to perform relative to the rest of the industry? And when do you expect them to kind of show up in a more meaningful revenue way? So I guess what I'm asking is the opportunity here, to claw back some of that $10 billion of lost revenue, or do you think looking forward, your competitive advantage may be even broader, and you might be able to open up more ad dollars to Facebook with these new techniques. Any thought on that? Thanks a lot.
Sorry, Dave and I are going back and forth.
Yeah.
When you think about how we mitigate some of these challenges, there's a couple of things to think about. One are, what are the solutions we have that can be on-site? So as we develop some of our commerce products, as people are using things like click-to-messaging ads are a good example of the close the loop, at least to the point where you're connecting directly with a customer, happens on our service. If our commerce efforts are successful over the longer term, we'll be able to close that loop directly on our own service. The other thing that was interesting in your question is, you're right that this is about, relative comparative advantage in a very highly competitive space. That we have been able to use data, I think, in a privacy safe, but very efficiently. Some of the data we've relied on has changed. That's causing some near-term challenges and headwinds for us. But over the long run, once that settles out, advertisers are going to go where they get the best return. So we have highly engaged platforms. We still have very important data that is first party that we are able to use to target. We're working on measurement solutions, and we're also working on things without the industry. So we think while these times are challenging, over the long run, we do have a very strong competitive advantage when you look across the opportunities advertisers have to advertise both offline and online.
Our next question is from Brent Thill with Jefferies. Please go ahead.
All right, so this should be, they're almost to the
Reels
list.
monetization, but are there early learnings that you've learned and taken away so far that you could share? And then the second question we get is just on Reels budgets. Are they incremental to overall spend, or are you seeing advertisers repurpose from stories and feeds into Reels? Thanks.
I can take those. So on the first, it is the process I've described, which is that we know that if there's a consumer product that consumers are enjoying, we are able to move advertisers into that product if a couple of things are true. As Mark talked about, the format of the ads fits into the format of the product. Reels, which is short form video, which is text, which is pictures, is a great format for us because those are all things we've already done well, both on the consumer front,
But how do you
importantly
monetize?
on the ads front. So we are able to create the format of the ads and
I guess
offer
you
that to
leave
advertisers.
the
Then
ad
we
at
need
the
to
end?
help advertisers create compelling ads. And we need to help them place across our different properties. We have a lot of places you can place ads. We have a lot of experience in this, and we are on a ramp. It is a multi-year ramp, but we've learned things. Make it as automated as possible. For example, rather than ask advertisers create the perfect ad, the more you can ask advertisers to give you the components of that ad and create it for them, the better. Things will work on over time. On targeting, try to figure out what are the advertisers' real end goals, and then we can suggest the products that fit for those end goals. So if you tell us you're trying to get to on-site conversions, or you tell us you're trying to get people to message you, we can then put you into different placements across our ad offerings, and Reels is a very compelling part of that. On the incrementality of budgets, it's always both. When we roll out a new product, there's always some of the budgets which are just being reallocated from other parts of our own platform because there are people who will have a Meta budget or a Facebook budget or an Instagram budget. Over time, our goal is to grow those budgets. And we do that the same way. It is our, large teams, feet on the street, working with our global
You grow 'em by
advertisers and our
making
largest
the
clients.
ads effective.
And it's our online ability to sell and monetize and grow that
If ads
I
work,
think we are industry
people spend
leading on,
more.
working with SMBs, where we have to show them the returns and win their budgets. And when we roll out new products, and partially it's incremental, as long as we're really delivering great ROI compared to what they can get off of our platforms, over time those budgets can continue to grow.
Great. Operator, we have time for one last question.
Last question.
Very good. Our last question then will be from Alan Gould with the Loop Capital. Please go ahead. Mr. Gould, your line is open. Please go ahead.
Dun,
Thank you
dun,
for taking the
dun, dun.
question.
There you go.
Two questions. Dave, could you just confirm, did you say MAUs would be down sequentially in 2Q? And Mark, last quarter you spoke, you were quite open about the competitive issues on TikTok, which seem to be impacting the whole industry now.
Good
Any way of
question.
quantifying how much you think TikTok is impacting Facebook? Thank you.
It's affecting them
Alan,
heavily.
because of the loss of users in Russia, we do expect there to be a sequential decline in MAUs in Europe.
MAUs is monthly active users.
And we think that will feed over into overall global, because I think that will tip it to be flat to down. Just as a reminder, government restrictions on Facebook access in Russia were implemented in late February through early March. So some Russian users were still on our service as active users during our Q1 calculation. So part of that is just the way we calculate MAUs the last month of the quarter, and so that's going to spill over into Q2.
That's all you got?
I think it's clear that short form video is a massive opportunity for the industry broadly.
Killing the world's
we're
attention
very,
span, though.
pleased about the offering that we have with Reels and the opportunity for us to compete for share and time in the market. Obviously, other competitors have strong offerings like TikTok, but we're pleased with what we've got with Reels and the efforts that we're making to grow that important product.
Great. Thank you, everybody, for joining us today. We
All right,
appreciate
guys.
your time,
That's
and
it
we
for
look
today,
forward to
guys.
speaking
Everybody
with
hit the
you again.
subscribe button. Listen, we do this live for free
This
every
concludes
single
today's
weekday
conference.
morning right here on YouTube. We do this every weekday morning right here on YouTube. We day trade the market live for free. We trade and day trade and swing trade and invest every single day. Starting at 6:30 a.m. Eastern Standard Time, 6:30 a.m. market time. We stream until after the opening bell, hours after the opening bell, and we trade and we put our trades up live. We trade $120,000 in buying power. We talk about the biggest stories of the stock market, and so hit that subscribe button, hit the notification bell. I appreciate everybody for joining us here today, and we'll see you guys next time. Good luck. Have a good day, guys. Get some sleep tonight. We'll see you guys bright and early tomorrow at 6:30, and appreciate all the love and support. If you want to help support the channel, guys, check out our website. Everything is free. My main goal here is just to give traders free content. We don't charge a penny for anything. We don't sell anything. We don't charge for anything. We don't claim to be experts. We don't try to be gurus. We just give everything. We give everything away for free without claiming to be experts, and just try to create a free trading resource and community where we don't charge for content. And so if you appreciate that, become a member. It's completely free. You'll get a watch list emailed to you daily and a lot of other good stuff. Hit the subscribe button, guys. I appreciate all the love and support. Thank you, Black Ops. I appreciate you, brother. Thank you, man. Thank you, Joshua, for joining us. Thank you to Tilly, Michael, Chris, Fernando, Clean Slate Pawn, as always, David, Logix, Joe, Jawsy, William, Douglas, of course, Red Days, Hugo, Mo, everybody else that joined us. I appreciate you guys. Moon, everybody else. Thank you, guys. Appreciate the love. Appreciate the support. Good luck, Andy. And everybody else, guys. Have a good day. We'll see you guys next time. Good luck.